got trailing FOMC, we've got VIXperation, we've got OPEX all on deck for our weekly outlook this week for markets and profile. Let's get into it, shall we? Hi, my name is Josh. I'm the founder of Trade with Profile. We're a skill development firm, and we come alongside developing traders looking to improve their ability to anticipate where the market is likely to go based on how it's behaving. And we use profiling tools as a way to organize market information so that we can really get a sense for what are the prices that are most important, because not every price matters the same as others. So over the next 10 minutes or so, we're going to look at the week ahead, look at some calendar events, we're going to look at some profiles, and we're going to get a sense of some likely scenarios for the week across the S&P, NASDAQ, Russell, and crude oil futures, as well as maybe a couple others. And so let's dive in, shall we? First place we're going to start is just a reminder of our kind of our macro narrative. And whenever we're putting together a plan, we're essentially telling a story. And so what's the story that we're trying to tell? This is the story as it is right now. And some of this has changed, some of it's not. But essentially, my perspective is that everything is hanging on rates and non-farm payrolls, which we had on Friday. Essentially, we got a rate cut. Will we get another one? That's the big question. Overall, I'm of the opinion that the chief AI trade is waning, because we're looking at B and C players now as opposed to the A players, as those have gotten most of their value. We are still in a corporate buyout blackout until we get to the election. So that means that companies can't buy their stocks back. We did have a potential issue, which was the stock worker strike. That seems to have been resolved. So that's off the table. That's pretty good. We do have an election in less than 30 days. And it's still my opinion that that risk is underpriced. Pretty likely that regardless whether Harris wins big or wins little, Trump is going to declare that he wins whether he wins or loses. And that's going to be, it's just going to make it harder to get a good result on that night. And I don't think people are pricing that in well. And finally, we're in a seasonal window of weakness. And specifically from this coming Wednesday until OPEX kind of opens up the door. So we'll talk about that as we get going into it, right? So with that, let's go take a look at the calendar and see what we've got ahead of us there, kind of day by day this week, what we're looking for. So on Monday, not a lot on Monday. We do have some Fed speak, so be mindful of that. We got Bowman and Kashkari speaking. Bostic will be after the close. Tuesday, we've got another Fed speaker. We've got a three-year note auction. That is something to be mindful of. Wednesday is when we have VIXperation. So we have VIX expiring. And then we also have Williams. We have a 10-year note. We have FOMC minutes. So this is a rehash of the FOMC that we had several weeks ago. We'll be watching those minutes. That's likely to be a good binary reaction intraday, especially since that's going to be paired with the 10-year note auction. Thursday, we've got core CPI. That has been less of an impactful catalyst. It's kind of going back to where it used to be, but still be on and watching that, especially since it's clustered with jobless claims. So jobs are definitely in view. So we'll be watching and marking that release. We have another Fed speak, bond auction, and then on Friday we have PPI, and that's before the open, and then we have a bunch of Michigan consumer and inflation expectations. So those are the things that we're going to kind of navigate around. It is also OPEX. So the biggest thing on Friday is we have OPEX. Right? So that's going to kind of lead us into the week. So with that, let's jump in, look at the charts real quick, and get a sense of where we are. We'll start with the S&P, and just going to start real quick to look and see that we do have a new change in posture, given the highlight in blue, and that's a new bullish posture. So that means that price is above the 5-day and the 20-day. So 5-day, 57.61, 20-day, 57.63, and we close at 57.75. So not high off of that, but a little bit. Looking at the VIX curve, we're back to complacency. So we burned off any concern heading into non-farm payrolls, and we're back above the trailing FOMC VWAP for the last 3 FOMC meetings, and still looking for new all-time highs. So with the complacency here, that could give us the opportunity to get up here, but complacency is what it is. I mean, we burned off a lot. We could see a pullback early before they make an attempt. I'm cautious whenever we're really complacent like this, and those numbers are pretty complacent, especially even on the 9-day, 30-day. So everything's underpriced. So if there's any kind of risk that comes in, we can move lower quickly. But let's look at that in terms of what that means for the ES and the profile. So let's start here just by looking at the weekly and get a sense for where we are and what we're trying to do. So I do have a trailing, when I talk about the trailing FOMC. So this is the trailing VWAP from the FOMC rate cut. You can see where we close the week right above that. Here's that 5 and 20 day that's right here, and prices above that. So as long as we stay above that, that does offer the opportunity to move in this way higher. For Monday, we've got 57.57 or 58.57 as an expected high, and 57.40 as an expected low. For the week, expected low 56.68 up to 59.30. How do I generally expect this to play out? Now, we did have a lower week, so we were one time frame lower, just a little bit, just a little bit, but we're definitely holding a range, a tight range here from 57.40 to 58.10. That's likely to be the range until we get through OPEX. Now, it could start to open up after Wednesday, but essentially watch for moves out of this range. It could be really noisy inside of this range, but watch for moves below 57.40. I mean, the easy first place for that to go is to 5700. And if we're up here, then we would look toward 5850, potentially 5900. Balanced, if we're above 5760, we're looking this way. If we're below, we're looking this way. Watch the edges to kick us back, and then watch tempo on the edges. If it becomes a significantly bigger week and we say can't hold at 5700, we could push toward 5600 if we use all of that weekly range to the downside, in keeping with kind of the expectation of us being underpriced in our risk. See 5700 is a really big reference, so nothing really breaks unless we get below 5700, but if we do, then the path back towards 5600 opens up. And if we do start to see more risk come in as we get closer and closer to the election, watch 5700 first, and then below that we would look towards 5600. But if we continue to stay up here, and if we are able to migrate 90-day value up here, overall we have what we would call a bullish imbalance that could take us toward this 5900. So the longer we stay above here, think that's a form of correction over time that opens the door for us to keep pushing this way. I'm cautious around that given where we are, at least until after the election. Once we're past the election, not as big a deal. But until we're through the election, very much on a cautious side. And also noting, last week we had a pretty strong selling day on Tuesday. Even though the rally off of non-farm payrolls got us back towards that, this is still in play. So could be noisy between 5760 and 5810. But overall, for Monday, we're going to be watching this area. Neutral day on Monday. If we're above 5780, then look for pushes up toward 5820. Could also come here. Failure here opens the door here. So this is kind of expectation 1, and that would be expectation 3. Okay. So, and then for the week, overall, we're just watching either way. This is what happens when you're in balance. Okay. Let's move on to the NASDAQ. Okay. NASDAQ, similar posture. Also, one time frame lower for the week. Here's that trailing FOMC that continues to be in play. The key reference coming in the week is going to be 20,050. If we're above that, we can make moves back toward 20,500. However, if we get below this, then the doors open towards 19,700. Given the complacency, I think that this is more my expectation. If we can accept below that, this would be kind of the second idea. If we look at the monthly chart, you can see we're still inside of last month's ranges. Pretty key, this 860 area. So keep an eye on that. That's an area that if we break, then that opens the door to 700. And as long as 700 holds, we go back this way. But if we fail at 700, there's kind of a vacuum. And if we start to price in the risk, like I think we might, that sets the stage for us to move significantly lower. Overall, coming the week, similar to the ES, we've had some sellers that are still in control of the auction, have not been challenged, even though we had some move higher and even off on-farm payrolls away from the most traded price of the week. We did stay below. So unless we can get above 20,300, we're still looking to the downside, back toward value, and then an attempt lower. On Monday, we're watching 20,100 as the key price. If we are above that, we can look for a push here. We can come down and test 20,050. So that could be here. And then if we're below that, look for a test to the bottom of the range. That's kind of the third idea. Watch the quick sheet for potential ranges. Okay, let's look at the Russell. Russell's balanced, however, has been moving lower. You'll see here the Russell actually made another new weekly low. And our expectation was last week that if we could get outside, because it was an inside week. So it was an inside week the prior week. And then we thought if we could make below that, we would test this week, which that did check out. And did recover by the end of the week back to balance. So you can see 5-day, 20-day, 90-day. It's all clustered right in here. So going to be pretty noisy and challenging, but ultimately we'll look for the auction to move out of this area. The question is to where? Well, if we're above 2230, I think 2250 is easy. If we make new weekly highs, then we're looking towards the 2270 area. If we push to the low side, we're looking at 2175. So this is balance. We're looking for breaks from balance. Any clues that come in on Monday, same story. The sellers we've been able to hold. However, we were one time frame higher. So what does that mean? It's going to be messy on Monday. However, if we are above 2230, then we can look for pushes up here towards 2250 and higher. If we're below that, look for new lows toward 2195. So that's kind of idea number one, especially if we're below the pre-IB bias at 2215. But below 2215, door opens continue to the downside. And finally, crude oil. Crude oil was the big mover last week, significant move outside week. So you can see engulfed the prior week, pushing from balance, solid one time framing in succession off of a strong multi-distribution trend day. This is geopolitical in nature, but moving us higher. However, notice that we were unable to pull value higher as we moved higher. We are moving towards some long-term key references here at 76 and 77. That's back to year-to-date VWAP. You can see for the month, we've got an area that we need to do some more balance. So watch for more balance here to pull value up for the month, and watch for further tests. If they can accept above, then the doors open toward 78 and ultimately toward 80. However, rejections here move us back toward value. Looking at the weekly chart, early prices in the week are likely to get pullbacks and then see if we make another attempt up, or we'll return back to value down here. Watch the top of this bracket. So we could look for rejections here, but below that and then back to 70. For Monday, we did have a neutral day, however, one time frame higher. watch for it tags at 74.50 and then to new RTH highs toward the 76.77 area. Failure below that tags this naked VPOC here at 73.32, and below that we could go and clean up these singles back toward 72. All right, that gets us through kind of our key 4 products. Let's see if there's anything else of interest. Keep an eye on the rates. So notice no change overall in postures in the treasuries, but they are all in new bearish postures. We're keeping an eye on those. Let's take a look at the euro real quick, as that is in an extreme. So if we can make some new weekly lows, I think there's an opportunity. You can see 5 days here, 20 days here. There's an opportunity to move back toward we look for 1.106 would be a good area. We're in an area of balance here. So let's watch for early lows, and then I think there's a potential to move back responsively as they're moving towards that 109 area. So have an alert here to see if we can get new weekly lows, and then we'll see. So we'll keep that one on the radar. Okay, ETH was on the thing last week. We were looking for a reaction at the bottom of this range, and that has come in. So looking for any pullbacks. We're going to defend the bottom of this range. We're looking for pullbacks to push towards the top of the range. So we're looking for 2680 as a start. So just to rotate back up. We're into an area of good composite value, an inventory that should hold the auction up. So we're in this range, and if we can break out to that side. So we're looking for pullbacks into the range to be long, defending against the lows. All right, so that's a couple ideas. Fantastic. Okay, that should be enough to kind of get us on the way. As a reminder, we're always asking what direction is the auction attempting to go, and how good of a job is it doing in that direction. And the reason that we look at the inventory in this way is we're also reminded that not every price is relevant or actionable in the auction. So some prices are more important than others. And hopefully by watching these, you're seeing how we're identifying where there's build out an inventory or where there's kind of holes in the auction. And that can give us insight into how we behave. Generally, we're expecting areas of larger volume to slow the auction, areas of lighter volume to allow the auction to move more freely. Finally, this is all narrative that sets the context for what playbook opportunities may be in play. So this is not saying necessarily how I'm executing. I'm going to use this narrative and this story and see how that plays out, and then look intraday with 4 question playbook trades to be able to execute on that. And those 4 questions are as follows. All right. First, what is the opportunity or target? So as we looked at some of these, part of knowing here's where we are and looking where we're looking to go, by having an idea of where you're looking to go, you can set an expectation and build your trade off of the destination, not off of the trigger. That helps you set the risk relative to your opportunity, not setting the opportunity relative to the risk. And then once you're in that opportunity, the question is, what would tell me that I'm right? So whenever we place a trade, we're telling a story. Is that story playing out the way that we expected it was? That's good to know. It's good to pre-think that as we approach it. And then also, even more important, what would tell us that we're wrong? Our brains do not like to be wrong. So what is it that would tell us that we're wrong so that we can cut capital if we need to or get out? For example, I have some playbook trades where 15 minutes is about the time frame that thing should be in play. And if it's 30 minutes or 40 minutes, I'm still not to the destination, it's still not moving, I start to get more concerned that it's actually not going to play out because I know how long it should take for that idea. So think about those things of like what should and shouldn't happen in those ideas to help guide you and keep you primed to take the action that you need should it not play out. Okay. Finally, just a couple next steps for you this week. If you want to know more about those 4 questions, you can check it out on our website. Be active with us on the artist formerly known as Twitter. If you want to talk to me about your playbook and have a free audit, I'm happy to set aside time every week to look at traders' playbooks and just get an assessment, give you some concrete next steps. There's no commitment beyond that, but it's part of the way that I'm trying to pay it forward. And then if you do want to do some more intentional work, there's always our development pathway. Okay, gang. Thanks for watching. Hope this gets you set for the week. We'll be back with the daily outlook as the week progresses, and we'll see how VIXperation and OPEX play out as we are in this seasonal window of weakness. And we're noticing that strength is holding, but we're pretty cautious. All right, we'll talk to you next time. Peace.